Hello, welcome to the stock market analysis. Today let's look at what's happening in the stock market and see where the stock market is likely to go. So the market breakout of this resistance area here, this is the S&P 500 and go here. Now this is the support area here, but as you can see, the market moves up and then it kind of forms this double top kind of pattern. And I think the reason why we are doing this is because we are at the old highs here. So naturally there will be some resistance or at least some sideways trading. Now one good thing about this is the market is still above the 50-day moving average. So there is some midterm bullishness in it, but if the market drops below the area here, we might suffer a double top here, which might bring the US market down to this area. Let me just pull out the stock and MACD indicators. Let's look at the S&P 500 with the MACD and stochastics. You see we have the same highs here, but what is not good is there's a bearish divergence here and also MACD crossover sell signal here and bearish divergence here, if you can see it. So there's a possibility that the market may just correct and go back down here. But our reference point will be around here. This is the lows here. So if the market is able to stay above this area, just ignore this bearish divergence signal. So it's most likely going to go trade sideways and go back up. Let's take a look at the DIA. DIA is the Dow Jones ETF. So we have this support area here. DIA is a bit overbought now, even in the weekly charts, and MACD histogram is declining, showing bullish momentum is slowing down. In the daily chart here, we have this MACD cross as well. So there is a possibility also that if this DIA cannot stay above this area here, it might just decline and move lower to meet the 50-day moving average. There's something for us to take in mind. Let's look at the QQQs, which are the tracks the Nasdaq. So we also have a bearish divergence here, but today it gaps up. Okay, and weekly charts, it has made new highs and trading sideways a bit because of the resistance here. So good thing that there's a gap up here, and we just trading sideways, I think, and hopefully as we trade sideways, ignore the bearish divergence here and continue just to move up. So far there is no weaknesses yet in the three major indexes, except that we should based on what the MACDs and stochastics are telling us, there is a possibility of a decline unless the market can ignore the signals around here. So let me just look at XLK. XLK is doing very well, right? It gaps up and make a new high here. So technology wise, if the XLK continues to move up, we might be able to ignore all those bearish divergence signals in the markets and continue to move higher. The SMH is also making new highs, which is a plus point here, because when the semis and the techs are doing well, all the bearish divergence signals and fear of short-term selling in the major indexes can be ignored, because when the market is led by the semiconductors and also the tech, so we're most likely to see newer highs here. So hope you enjoy this analysis and hope this helped you. If you find it helpful, please like and subscribe to my channel, and see you in the next one.